following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, most of you probably have heard that we lost our good friend Mark Douglas on the 12th of September. Ironically, it was within an hour and 50 minutes of his wedding anniversary and also his wife Paula's birthday. But he passed away in his sleep, very peacefully with his little cat Tigger on his lap. And he'd had a really bad heart attack about a week earlier, where he had been in the hospital. And we had some friends that had got him in to see a very influential doctor at the Mayo Clinic. And he basically said that his heart was just a little bit too weak to do any operation, and they were going to have to do quadruple bypass surgery. That's one step away from heart transplant. So he had a pretty good idea that he was in bad shape, and he did go peacefully. However, I have a couple of really good Mark Douglas stories. I could probably go on for days because we've been friends for over 30 years. And one of my favorite was back in 1995, Mark and I were giving a seminar at his condo in Chicago, right on the lake. But on the top floor, they had a beautiful business room there where you could have seminars, and we had a group of 10 people in for the week, and we were trading every day, live trading and teaching at the same time. And we had 10 people, of course, as I mentioned. Anyway, I was trying to kill a little time in between trades, and I was telling a story about one of my children, about the funniest thing that's ever happened to me in my life, and it related to the hockey game in the 1980 goal in the middle in the Olympics, where the U.S. team beat the Russians. It surrounded that event, and at the back of the room, these three guys raised their hands. And I said, "Yeah, you have a question?" And he said, "Yeah." He said that we were on the ice that day, and they were three of the players that were on that hockey team. And some of you that knew Mark, he was really big into hockey. He played hockey up until just a few months ago when he had his first heart attack. He still played adult hockey, and we became friends with these folks, and have still remained friends with them through the years. In fact, I'm in contact daily with two of them. And but anyway, it was a wonderful experience. The other one that Mark reminded me of is when 1989 we were in Chicago. I was back visiting some friends, and I had to do I think it was a TV show for one of the Chicago stations where they're interviewing me about astrology or something. I don't remember exactly what it was, but we were up in Barry Lynn's office. And it was towards the end of the day, and we were just sitting there chatting. There was a guy up there that was doing work with W.D. Gann, and he was, telling everybody in the room, there were about 8 or 9 traders there, that there was absolutely no way that the soybeans could go below. I think the price was $7.95. I don't remember. It was something like around 95 was the last part of the handle, and he kept saying that and saying that and saying that. And it has got towards to be about 15 minutes towards the end of the close, and it got about 10 minutes to the close. And finally, one of the old-time traders was sitting in there who was already short a lot of beans. He says, "I'm so tired of listening to this BS." And he picks up the phone and he says, "Sell 200 July beans at the market." And beans went through 95 like it never even existed. They dropped 20 cents. Now, it wasn't just that 200 lot. There were other stops there that got hit, but it was a critical chart point. It was right on the trend line, previous week's lows, and that kind of thing. And once it failed, that's what happened. And anyway, Mark always, talked about that you don't know where the market's going to go. And so the only person that you can protect yourself is yourself, because you're your worst enemy if you don't do that. I learned so much from him, through the years that he will be missed very sadly. I'm hoping to have Rich Anderson on here at the break. because Rich also was a longtime friend of Mark's, and he will be missed a great deal. Okay, I'll talk a little bit about the markets now. We're coming into a very critical time these next 10 days because we started with the solar eclipse and new moon today. Usually a new moon is usually a high, and a full moon is usually a low. That work was done by, I call him Tommy Two Moons. He's the fellow at Nomura Securities in London that did the long-term work on that showed that if you buy on the new moon and sold on the full moon, that you outperformed the S&P by about 16 times. I know you might find that a hard statistic to look at, but he's got the data to back it up. So we'll see what happens if the market is going to make a short-term top up in here, maybe a longer-term top. I don't know, but I've posted into the room here today the chart of the breadth of the market, and as you can see, since going into into August 24th, the new highs to new lows were, was going straight down. That was from, August the 19th. And we have still not had any new highs to new lows over the whole month. And the market has been basically, going sideways. We've had a little bit higher high in the NASDAQ, and we made a 4-point higher high in the Dow Jones from the previous week. But other than that, the S&P and the New York Stock Exchange Index, neither one of those have come even close to taking out those highs after the rally that happened between the 24th and the 27th of August. So this market is in a real tight triangle. The slightest bit of weakness would, could really put this thing headed down. Now we do have the big Fed meeting, and they're talking about whether they're going to, pull the rates or not. But what's really funny, well, ironic, I guess is the word, not so much funny, but the planet Mercury is going retrograde at the exact time that the Fed is supposed to make their decision on the 17th. So classical astrologers say that that's the absolutely worst time to make a decision. So usually what that means is no matter what decision you make, it'll probably be the wrong one, but they should not make any decision because that would be the easier one. They haven't made a decision all along. Why they would make it different this time, I don't know. The bond market is telling us that, the rates are already going higher, and we'll have to see if that's going to be the case longer term. But rates certainly are going higher. That's what it looks like from just from looking at the bond market. Now I wanted to post a couple of charts in here that look pretty interesting to us. One is this is from Ed Yardeni, and he is one of the better researchers on the street, and people pay a lot of money to listen to this guy, and he's basically showing that the month of September historically, is the worst month going back, through, 1928. And if you remember, well, you don't remember because you weren't around in 1928, most of you anyway. September 3rd was the high of the market. The Dow went from 383, and then for the next 3 years, it went all the way down to 42 in the Dow Jones, making it the greatest buying opportunity in the history of investing. Now, the next one is we want to take a look at what the drops have been in some of these markets during this time, and this is the same. This is from the Economy and Markets, also from Ed Yardeni, and you'll see that some of these have been pretty substantial. In 2014, we had a 10% drop, and then in July through October of 2011, we had a 21% drop. But you see, most of them are relatively good. If you'll notice the last one down there, the Dow Jones 1929. You'll see that the market dropped 48% from September 3rd. I believe the market bottomed about 10 or 12 days after the crash of 29, which was on October 29th. And I believe it bottomed on the 10th or 11th of November. And then it rallied almost 61% into April the 2nd or 3rd of 1930. And then after that, it went down from 1930 all the way to July the 5th of a 1932, where the ultimate bottom was in, and then the big bull market started. But we were in a massive depression all during from 32 all the way through 38. So there weren't a lot of people involved in the stock market at that time because there was so much, there were just very few jobs going around, and that's what made it a little bit, what's happened. Anyway, Rich has just responded to me, so he's going to be on the show at the break, and Rich will be coming out for Mark's services, and some of the other traders will be coming by to pay respects to him. He's certainly going to be missed. He was such a nice guy. So many great stories. Oh my gosh, they just go one after another. Okay, now I wanted to bring just to show you something. Fact is, I spoke to a lot of buddies over the weekend because of the relationship that many of us had. Mark was a really a regular visitor to the trading house in Pismo Beach, California, during 1990 through 1988 to 94. Those 6 years that we had the trading house there up on the cliff overlooking the Pacific Ocean, and that's where Twentyman lived in the upper part of the house. The lower part of the house was a giant family room type that we converted into a trading room. We had like 6 desks in there, and we had wall-to-wall charts. It was really spectacular. And Mark would come out all the time with his wife Paula to spend a week or two, and many times he would bring some famous traders from the Chicago Board of Trade that he had been working with. Robert St. John had been there. Tommy Baldwin had been there. Oh my God, Rick Barnes had been there. A lot of them have been there, through the years. And as a matter of fact, Mark wrote his book, Trading in the Zone, right here in my office in Tucson, Arizona. He and Paula arrived here from Chicago on August the 16th, Elvis's day of Elvis's death. And we were having a monster monsoon rainstorm. I mean, it was terrible. When I dropped them off at their house, I couldn't get into my house because the garage door, electronic garage door, wouldn't open. So I had to sit in the driveway until the rain stopped and the electricity came back on. And while I was sitting there, a lightning bolt hit the giant tree sitting next to the house, and it split in half, and it was like a giant spear going right into my house. It went into the back part of the house in the bathroom and put a giant hole in the ceiling, and the rain just kept coming in, and it wouldn't stop. It rained for like 6 or 7 hours, and it filled my house up, all the floors with water. And so neighbors came in and helped me put the computers and stuff up on the desk, and the house was basically did about almost $30,000 worth of damage, all covered by insurance. But I always remembered, the day that Mark arrived here, because it was very, 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 very strange. Okay, we'll come back and we will take a look at the euro in just a moment.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and I've posted the chart of the euro on a 4-hour basis. This was a chart Jim Twentyman brought to my attention on Saturday morning. I was chatting with Jim about Mark, and of course he was a very good friend of Mark also, because Jim lived in the trading house and when Mark was there, Jim would live on the 3rd floor, Mark would live on the 2nd floor, and then of course the bottom floor was a trading floor. But well, we're all very close. Rich Anderson came out. There was just a lot of people in and out of there through the years. But Jim showed me this chart on the euro. He said, look, he said, there's one of those Twentyman lines that I like. He said, coming in at the euro, he said, it's got 4 hits. He said since early August, and as you can see this from point C there, it had 4 hits going up, and it shouldn't have got any higher than 113.70, and the high last night on a fast tick was 113.73, and it since has broken 70 pips from that level, so that fit in nicely with what he was looking at. I wanted to mention to you oh, I already did. Sorry, I had that on my list to talk about. Was the part about I don't hope I mentioned it anyway. Well, I don't think I did. When I was working at Commodity Corporation during 84 and 85, the two things that if it were to happen to you, if you had a death in the family, or if you had a situation where you had a divorce, you were automatically put on a sabbatical for trading. You couldn't trade for a month, and then when you came back, you were on peer review for another 3 months, where your trading colleagues would be watching your equity run, to make sure that you didn't do anything really stupid, and were following along with what you were supposed to be doing, and that lasted for another 3 months. So that's something to keep in mind. Now, even though Mark was not a family member, he was certainly a good friend who I spoke with quite a bit and visited with quite often. And it was ironic because we went up there twice to see him, and neither time he didn't want to see me or Sarah, and so that was a little troubling. But he was not feeling very well, and I guess he possibly knew. I talked to him on the phone a lot, but at the very end there, the last few days, he was quite scared, and I guess for reasons that we now know. Okay, move on to the next. Let's take a look at some of these markets here that we've been watching. We want to look at the let's take a look here at the New York Stock Exchange Index first, and we want to watch that one. Oh, we should look at the DAX, because that's the one that is that's the clearest of all of these international charts, and it's a very large market. But as you can see, the DAX had a 2-week rally, and now we're trading under the price that we have posted here, because that was Friday's price that we got down to 100.70 today in the DAX. So that's also a possibility that this rally, could be over, because since April, we had 1, 2, 3, 4, 5 2-week rallies, and that's all they've been. Now, if this turns around and gets really strong, then this sequence would be broken, and we could have more of a rally. So that's the case. And there's a good case can be made that a rally is coming, and the reason for that is that we have such a strong astrological, well, they're just cycles is all they are, starting with the solar eclipse and new moon today. We go through Mercury retrograde on the 17th, and then on the 23rd we come out with the autumn equinox. On the 24th we have a Venus conjunct, a Venus trine Uranus, which has got a very positive bias for a top, and then we end on the full moon and a lunar eclipse, and that's on the 27th, which would have been Mark's 67th birthday. So whether that's going to be an historic event or not, his birthday was marked several years ago when our good friend Byron Tucker, who lives up in Scottsdale, was visiting, and he was out at his Scottsdale home from New York, and we were going up to be with Mark for his birthday, and it was a Friday morning, and it was a Friday morning in the Byron called me, and he was panicked, and he said, "My house is burning down," and I thought he was, just being a little bit exaggerated. But after he told me what was happening, we hopped in the car. By the time we got there, which was about an hour and 40-minute drive, the house had burned completely down, and that was on Mark's birthday also. By the way, Mark's new book is finished. It's going to be out very, very shortly. I recommend you folks take a look at that book really closely. It took him well over 3 years to write it, and it's got some wonderful stories and some really great ideas for trading. And I'll let you more about that as we move along here and find out more when it's being published. Paula will keep me informed about when it'll finally be out. When we come back, we'll be talking with Rich Anderson of Anderson Capital Management.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Rich Anderson of Anderson Capital Management on. It's been a long time, Rich.
Hi, Larry. How you doing?
I'm hanging in there okay, buddy. How are you doing?
Doing great. Yeah. I know what you mean.
Well, we lost an old buddy.
I know. Well, I'm figuring his last book he had almost finished. I figure you'll make sure it gets printed.
Yeah,
everybody was waiting for it.
It's pretty much done. I know when I spoke with you, you were one of the first people that I called, after Paula had called me. She had called late that night, right after you died, but the phone didn't ring for some reason, or it just rang once or twice, and I didn't get it. But it was sort of a surprise. I had so many memories. I was telling some of the folks about some of them, but some of the fun times in Pismo Beach in Chicago will always be remembered, and the people that he touched. I mean, some really, really big traders, relied on him for some really great advice, over the years. So anyway, let's get back to the markets. We got to move on. As Paula told me Saturdays, he says life goes on. He would not want you to do anything different than what you ordinarily do. So let's talk about the cattle market, Rich. We had you on about a month ago, and you thought the cattle were going to get down into the low or mid 130s, and we're almost there now. What's your feeling there on the cattle?
Well, they either hold right here, and this is a trading range in this 140 to 144, and it just stays a trading range. I thought the sell-off on Friday was overdone by a good bit, but everybody's still got one eye on China, and worried that the whole economic thing of the world is going to turn into a recession. But I'm going with it's 136 would be the downside objective. I think we'll probably trade up towards Friday's highs this week, and probably trade down to the low of the August 26th, which is that 39.5, and just bounce it back and forth. It looked like on Friday, Larry, somebody was just taking stuff off the table in a lot of, and particularly on Thursday too, just taking stuff off the table. And you can see by the open interest that, particularly in the ags, but I think in other things too, they're just taking down positions. At the quarterly, the investment committees have their asset allocation. And of course, October is just around the corner, and I think some of them are thinking about reducing their commodity exposure, which means maybe only 0.5% or 1%, but that's thousands of contracts when you're managing billions of dollars.
For sure. Now, we had a pretty good rally here. Tell us a little bit about that crop report that we had on Friday. What was it was a big surprise, I guess, in some of the things.
It was a big surprise and a little bit strange. Initially, the markets sold off in corn, even though the corn was actually kind of friendly. But then it started to rally and rally pretty good. The global supplies are what really lit a fire under the corn. But as an example, the USDA increased the crop yield in Illinois and reduced it in Iowa. And Iowa's the best state, and Illinois is not very good, and I think that'll be reversed. One thing I've noticed is that when these trends, just like in the market, there are trends and reports. I'm expecting October's report to continue the trend with less crops, and will help to continue to lift the market. The flip side, though, is that our exports are way behind a year ago in wheat, corn, and beans, and so at some point after we get done worrying about the supply, they'll go to the demand, and that's when I think things will be a little tougher to push up.
Yeah,
but right
Rich,
now they're higher.
Regarding these funds and the commodities and stuff, China has been, the largest buyer of commodities over the past 5 or 6 years, and maybe even longer than that. But, the fact that they're scaling down and actually selling some commodities, I mean, that ordinarily that would not be friendly for longer-term economic growth.
They have massive excess production capabilities. And last week, there was that list of, they're 50% or greater in 4 or 5 different things like copper and iron. And this would be a worldwide slowdown problem. And that wouldn't be good for any commodities. And that's why I think you're going to see these asset allocation committees reduce their exposure. And there's billions and billions of dollars. And it makes a big difference. When you got to go with the tide, and the tide's going out, that's kind of seems what it is. So we'll get the rallies, but you sell the rips.
What about when these hedge funds, they have a built-in fail-safe that if they lose like 2% a month, they stop trading. I mean, some of these hedge funds, David Einhorn and Ackerman and some of these guys who have been superstars, one was down 14% for August, the other was down 16% for August. Are you hearing other figures like that from other major funds too, or?
Yeah, August was rough and whippy for virtually everybody, it seems to me that the nature of the markets has gotten a lot more whippy because there's programmed trading in these commodity markets now, where if X happens, the computer automatically does Y, and it has nothing to do with anything other than that, and that causes these wide swings. There's no floor anymore, so there isn't, somebody to go against it. So when they see size coming in, the other side just disappears, and there's an air pocket. I believe that's what's happening.
Okay, Rich, I want to talk to you just a little bit about the derivatives market, because, when you and I started trading, back in 1836 or whatever year it was,
Yeah.
we've known each other 40-some years, but, we didn't have all of these crazy derivatives and stuff like we have now. And I was having breakfast with Byron Tucker yesterday up in Scottsdale, and, we were, talking about it, and he said that, there's supposed to be something like a quadrillion, that's a trillion different types of derivatives. Many of them are not even regulated. Do you have any words of wisdom about this? Or
Well, the exchanges have limits on how big you can trade, but the derivative market has developed, and so people like a big hedge fund, once they've got their limit, they can go to Cargill and do a swap, and they could double or triple their limit. But the derivatives used to be primarily in the oils, and think back to Enron, and they were a big derivative king, and then they got blasted. But now they're everywhere, and so anybody who wants to trade more than whatever the exchange says and whatever the CFTC regulates, they can do it with off-book swaps, and so it's gotten a little messy. And then you've got the ETFs, and the ETFs, when in the old days, you buy a mutual fund at the end of the day's close. Today, you can buy it in the morning, sell it in the afternoon, and it's the same stocks. And so when that money flows in, everybody's buying the ETFs are buying the same stocks, and when money flows out, everybody's selling the same stocks, and that's making it just that much more whippy. But then we also have the ETFs in gold, oil, bonds, the whole works.
Byron said that there's some great inefficiencies in the ETFs, like what occurred on the 24th. Some of these stocks would open $15 or $20 lower, and yet there was very little trading at that time. So I'm a little concerned about counterparty risk on ETFs and some of these derivatives. Much like what happened with long-term capital, in 1997. That's one of the big problems that they ran into, and they had 3 Nobel Prize economists on their board. So, we'll see what happens, but that's, what we're looking at.
Yeah, ETFs, you have to be careful and make sure it's a highly liquid one, and even that isn't going to help you if this thing locks up. I don't know if you remember back in 1987, OEXs were the big options, right? And then we had the crash.
Yeah.
And the OEX market ceased to exist on that following Monday. I mean, nobody would give you a bid or an offer. And that could happen in the ETFs. In the meantime, it's a huge money-making deal for any, the BlackRocks and the Vanguards and anybody that has their own ETFs. It's because of these inefficiencies, the arbitrage, and they're making good money.
That's what scares me. The 3 things that scare me the most, of course, is the debt that's out there with, the treasury bonds and stuff, and then in the derivatives, and then, the deflation, because, you and I have been in commodities forever, and that's been our primary thing. And, we've been in, bear markets for well over 18 months and just about everything. And, some of them don't look like they have much. Copper's had a nice rally here, but, we're still near the lows in, many of the other things, crude oil and gasoline and all kinds of chemicals and stuff. So there doesn't appear to be a whole lot of, end in sight, at least looking at it from this end. Yeah,
the $28 rally or whatever, $24 rally that we had in copper, that was pretty good, but it'll come back down and visit those lows if there's any concern at all about China, and sooner or later they'll be concerned about that. And they just take too much of their demand.
It's hard to really put a finger on China, because they've stopped trading half of the stocks. They still haven't opened, and that's been well over a month that they've closed those. We happen to have friends over there that that would like to get out of some of these stocks, and they're not able to do that because the markets have not opened. Some of them have opened, but over 50% of those stocks are still not open. That's certainly not an efficient market, is it?
It's not efficient at all. I mean, it was a patriotic thing to buy stocks to drive the Chinese market up, and Company A would buy Company B stocks, and Company B would buy Company A stocks, and now they drove these prices too high. A lot of these companies are losing money, not making money. They close the market. You've got to reopen them and let them clear. If you don't let them clear, then it's 4 or 5 years to put a bottom in.
Yeah, it does so much damage, and they're a new economy, for capitalism. That's Rich, you remember when I started going back to China in '99 for the Merck, talking to them about, the free markets and how commodities work. Merck sent me back there to, get them ready. I went to the 11 major universities across China to talk to their graduate students about what was coming. And one of the things I warned them about, I'm sure nobody would ever remember it, but was the fact that there is inefficiencies in the market, and they go to areas where they can't go. But me being a technician, it was difficult to bring any of the fundamentals into the market. But it was certainly an interesting time. Listen, I'm going to let you go now because I know you're super busy during this time, but we'll have you on in another couple of weeks, okay?
All right, you take care, and I'll see you next week.
You bet, buddy. Thanks a lot.
You bet.
Okay, that was Rich Anderson of Anderson Capital Management, and he's a pretty sharp dude, and he's got his ear to the ground to a lot of really smart people. We got the stocks weakening up here a little bit. The S&P's down about 10, NASDAQ's down about 15 or 20, and the Dow's down a little bit. Now, whether this new moon came in last night to put a top in will have to remain to be seen. By the way, someone asked me a question about, I talked about Tommy Two Moons. I can't think of Tom's last name for the life of me, but if you'll just go in and Google new moon stock market cycle, and then put in Nomura, Nomura, because he's a technician for one of the trading groups inside Nomura Securities there on the River Thames there in London, and he's a really nice guy. If you ever got over there, he would certainly, take you into their beautiful cafeteria and probably buy you a free dinner, free lunch or something. But super nice guy. I can't remember his last name to save my soul. I will figure it out after the break here, and we'll see what's happening. So we're getting a little bit of increased selling here, but it's still early in the day. I believe that, we had this market set up to come down today just because of that new moon cycle, and we'll have to wait and see. One of the questions that I'm getting from the folks here at the Tiger Den is, the effect on China. Folks, it's really hard to figure out what's going on over there because part of the market is closed. 50% of the market, you just can't get out of your stocks. And as Rich was mentioning, that brings in, a great deal of illiquidity. And that's the one thing you don't want to have in a capital market is you want to be able to get in and out. Years ago, when Rich and I started trading, there were limits in commodities. The limit in corn was 10 cents, and beans it was 15 or 20 cents. And now what they've done is they've taken the limits off and they've expanded them that if they go to an area that they'll stop trading. I believe it's 120 points in the S&P. They stop trading for half an hour, but then they go back and open again, because this is what we want to be looking for, is really good liquidity in the market to tell us that that's what we're trying to do. So keep in mind that that's a very, very important factor is that liquidity that we have going. And we have tremendous liquidity. The problem is with all these derivatives, if there's a problem with counterparty risk, this is going to be something that the market is going to be really, well, let's put it this way, folks, it'll be all hell to pay. And I believe that is coming down the road. I'm one of the few people that believe that quantitative easing was not a good thing. And whether that's going to be either here or there, we have to let the markets tell us. But that's what we're watching here when we're looking at these markets jump around like we are. And as you recall, last week, one of the charts that I focused on here was a chart on volatility, and I wanted to bring that up just to show you. Do you think we've had some volatility, compared to where we were in 2009? This is almost nothing. I'm going to take a little break here, and we'll finish this discussion on volatility, and we'll be right back.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and one of our listeners, I knew somebody out there was listening, but many months ago, I talked about how these ranges were going to expand on the upside and the downside, primarily on the downside. If you'll recall, on the first day we had the 400-point move on the upside in the Dow Jones, I said this will be reflected in a 1.618 expansion to the downside, which would have been over 700 points, and we certainly got that on August the 24th when we were down 1,100 points, which made it expand even more. So what we'll be looking for now is the 1,100 points. If we multiply that times 1.618, that's going to get you out to 1,800 points to the downside on the next move down. And if that's the 1.618, and if we do a 127 of that, it'll be 1,400 points. So the next time you see a big down move in the Dow, look for somewhere between -14 and -1,800, for really a substantial bottom to come in. This was the same thing that happened to us during the 1987 market. It was the prelude before the crash happened. This is how the markets were expanding, and that's how markets always work. They expand and contract by these numbers of the Fibonacci summation sequence. But the chart that I posted in to the room today about volatility really describes this same phenomenon. You see, because we've had very little volatility here. That's the smallest volatility we've had in the history of the stock market. We were in a trading band of 1% for almost 18 months, and that had never happened. And so we live in interesting times, folks, which happens to be a Chinese curse. And we haven't had a interest rate increase in 9 years, so that's going to be interesting what happens. But the markets already know that. I mean, they've already increased interest rates. Just look at your mortgage rates, look at the T-bonds, look at the T-notes. They've been going down. That means rates are going higher. So that's, the bottom line of, what we're watching here. So the key this week is we've got a lot of things happening with the Fed coming in with their meeting on the thing. I don't think they'll do anything. Whether that happens or not, we'll have to wait and see. So live every day in an attitude of gratitude, and may God bless. And please keep Mark in your prayers.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.